I was born in France, raised in the UK the last 20 years, engineer by training, a little bit of a meandering path. It's the majority of our GDP, it's the majority of what's out there. It's not talked about, and there's such a huge opportunity to modernize and improve the way the business is conducted. Well, the strategic buyer is buying a capability, right? They're buying access to a market, they're buying talents sometimes as well, right? Like practitioners. They're acquiring, I think the word is access to people, to resources, to markets, to customers. I think that a lot of it is around whether it's at the unit level, the efficiency, like how can we do more with what we have, serve people better, get better outcomes, just align outcomes for everyone better, for doctors, for patients, and so on.
So you're buying a team, you're buying a history, a practice, a brand, you're also buying a patient book. And that patient book is potentially a thing of great value, potentially a thing of absolute disaster. I would absolutely hate to be running clinic right now. Hate. Because it is so hard to make a decision about what technology to adopt, not adopt. Everything does everything.
If I'm going to sell my clinic, my lifelong work, my baby, my main asset, it would matter to me a ton who is on the other side. It's a bit like, when you sell your child to the home, who's going to sleep in your room?
So we're here today with Cyrus, who is our first guest, who is not directly from the healthcare market. You've done a lot of work in and around healthcare, but not necessarily as an operator in a clinic or in a private hospital. So we're very excited about that, get some new perspective. But Cyrus, just introduce yourself. Let us know sort of what brings you here today.
Yes, for sure. So my name is Cyrus. I invested in you proudly last year when I was at a firm called Open Ocean. I was born in France, raised in the UK the last 20 years, engineer by training, a little bit of a meandering path, started my career at Salesforce. I was at Salesforce for 3 years. I was a sales engineer, 1 foot in sales, 1 foot in, closer to the product, and trying to find ways to modernize businesses across various industries. Then I went and became a VC investor. So that was on the investor side, backing software businesses that then went to, improve other companies' workflows. I recently made a transition. For a long time, I was very interested about small businesses growing. I found myself very interested in going back to traditional business, the traditional economy. It's the majority of our GDP, it's the majority of, what's out there. It's not talked about, and there's such a huge opportunity to modernize and improve the way the business is conducted. And so that's what I do now at Shore. I did that at Open Ocean to some extent as well. So I was backing businesses similar to yours in a thesis that we called AI-enabled services. That's still increasingly a big, huge wave coming. At Shore, my focus is more on just traditional services. Now we think a lot about AI, obviously, as well. And, we think about how we can accelerate these businesses and so on. And most of my work now is backing, small local businesses that we can help scale and expand in their geographies, primarily in the US these days.
Got it. So a lot of questions.
Yes.
I think one of the things that's interesting is the traditional economy, which you can put quotes around it. And there's a lot of stuff in there, right? There's home services, there's healthcare in some ways, there's all kinds of stuff. Can you just be a little bit more granular when you say that the traditional economy, obviously we're very focused on healthcare, but just more generally, if you had to say there are 3 buckets or 2 buckets of traditional economy, how would you sort of cut the cake to help people understand this is the general landscape of thinking about what we call offline businesses as opposed to purely digital businesses?
Yes, for sure. I don't know how to bucket it in. I think essentially the way that you would define it is the businesses that underpin daily life.
Okay.
And how when you walk down the street, when you live, say a week in the life on Earth, all the businesses that underpin your life. Now, I guess maybe the 2 easy buckets would be for people and for businesses, right? B2B, B2C. But I think the core is, and I think there is different levels of depth. So the first level maybe is I walk down the street and I can see an estate agent. I can maybe see an accounting firm. Actually, sometimes they're on the high street. I can see a plumber, an electrician, a laundromat, a nail salon. There's so many different hair salon. You name it. I think you can kind of go further in maybe depth or maybe more into the shadows of the economy. There's a ton of maintenance businesses, a ton of regulated industries that mandate inspections, repairs, maintenance, things like that. There are a ton of services that enable transactions, appraisals and things like that. And then of course, big buckets of life, like healthcare, which is in itself a massive universe. Education is a massive universe. So I think I would kind of bucket it that way, like the various aspects of either a person's life or the various aspects of a business's operations, if that isn't too high level. And I think specifically with healthcare, as you say, right, I'm not a healthcare operator, but I think there is so much to do. It's the most obvious point I might make on this. In this the discussion with healthcare is the most critical thing we need. I think that there has been a lot of PE activity rolling up different types of clinics and different types of healthcare services. I think, however, that there is a huge opportunity to modernize the way that this work is done, remove bottlenecks, enable practitioners to do more with their time and their resources, help people get better healthcare outcomes on a given budget and so on. I think that's just, I mean, that point I think goes without saying, but that's something that's really interesting to me.
So I think, so if we double click on healthcare for a minute.
Yeah.
So I think you've sort of set out two perspectives. One of them is from a capital allocation perspective, the buy side, buying, leaning out, consolidating, etc. And then on the operator side, it's trading more efficiently.
Yeah.
And so I think often those do work together, because you have some operators who, if they're trading more efficiently, are probably creating value for the owner, whether it's them or a group. But obviously that efficiency is something that the group is very much pursuing when they acquire or when they allocate capital to consolidate in a given space. So I guess if we focus on it from the acquirer side, from the putting the private equity lens on or the consolidation lens on, you start buying clinics. What does that transformation story look like? What do you think the acquirer is looking for in terms of, X to 2X? What is the X, and what is the transformation that they hope to achieve in terms of how the ultimate service is delivered onto the, in this case, patient or end customer? But what are they trying to change? What do they believe they can change by making that purchase?
You mean when someone's acquiring a new clinic? Well, I mean, I think there's so many different reasons. I think there's always the question of whether you're a financial buyer or a strategic buyer.
So, right?
Yeah.
Tell the story about
Of course. Well, the strategic buyer is buying a capability, right? They're buying access to a market. They're buying talents sometimes as well, right? Like practitioners. They're acquiring, essentially, I think the word is access to people, to resources, to markets, to customers. I think, your platform, you want to scale, so you would acquire a business, right? Like, I think that's the strategic angle. Financial is more trying to make a deal, right? Like acquire something at a time where it's ripe for its next stage of growth, and then infuse the resources for that growth to happen in alignment with the people who are in those businesses. And I think there you see, that's, I think, the magic of that field of work is also that there is oftentimes as many different plans to grow these businesses and scale them as there are businesses that you eat, right? And I think that a lot of it is around whether it's at the unit level, the efficiency, like how can we do more with what we have, serve people better, get better outcomes, just align outcomes for everyone better, for doctors, for patients, and so on. I think then there's also how do we grow, right? Like we have exceptional founders who build businesses, and then maybe they lack resources or capital to get them to the next stage, right? And so then that capital is something that we can bring into the mix and help enable that with the scale and talent that oftentimes these founders have, right? I think that's kind of how I would pair those.
So I think it's interesting. You used a label there. You said at the unit level. And I think even for me, when I think about having previously run clinic, when you're running clinic, your whole universe is there. It's in the four walls. If you own 3 clinics, it's in those 4 walls times 3. When you start to move upstream and you have 50 locations, 100 locations in group, you're thinking at the unit level, each of those is a unit, and how do you create that sort of value in the unit level? So I wonder if we could just put that under the magnifying glass and sort of say, okay, we just inherited or acquired 100 units, 100 clinics. Wearing your sort of value creation hat, where are you going first? What are you looking at first as an acquirer to start unpicking the plumbing and saying, okay, if we push that button, this thing happens, and if we push that button, that thing happens, and we can get rid of those things and these things. What sorts of things do you think you're looking at when you're appraising and you're saying, okay, I think we can create this efficiency? Where are you looking to develop that view?
I think it's hard to generalize.
Okay.
I think that it's also hard to adopt an approach. Like, I think typically you don't want to, I'd say it really is a case by case. I think it also depends on the people around the table who you're working with, what they want to do as well, right? I think definitely don't want to come and cut and like, change the underlying business without like having a proper view and so on. So I think that at the unit level, like I think at the core, especially if you're talking about AI, right? I think I guess what I'm trying to say is this matters most when you're thinking how to automate things. Is there an opportunity to automate things, right? I don't think it's applicable to the overall universe of every possible acquisition, right? In healthcare and across clinics. I think that you start with what I like to think about is if there was going to be a plan to modernize, if people want to do that, I think the biggest pitfall is to think too high level, is to think too, okay, now we're going to do ABC and kind of, stay behind an Excel model or behind a deck, right? And I think the best thing, however, is the reverse, is to be with a day in the life with how is the job done? What matters to the person who's doing the job? Where do they get frustrated? Where, if they get frustrated, probably also the patient is not frustrated, but things could have been done better. And so I think the unit level for me means understand the job, the day in the life or week in the life or month in the life of these different roles, understand like what is the chain of action and seize the opportunity, especially nowadays with all this tech transformation, to rethink, is there something that could be done faster, better, differently? And is this something that is crucially in alignment with how the worker, the doctor and the physician wants to do things as well? Is that making sense?
Makes a lot of sense. And then I would imagine a lot of people hear that and would find it, particularly on the clinic operator side, very refreshing, because I think there's this stigma, maybe because this is how some players are, or maybe just because this is how it used to be, of group consolidation coming in and just taking a machete and hacking this and hacking that and cutting this and cutting that. And I think what you're describing is a much more sort of collaborative and elegant approach to,
yes,
let's see what almost the natural rhythms are and where we can turn the knobs without necessarily decapitating it. And which that makes a lot of sense.
I think my point is always about prioritizing the bottoms up thinking versus a top down, if I can use abbreviations on this.
Yeah, absolutely. So you'd rather go into, let's say, in a group of 50 clinics, you'd rather go in clinic by clinic and say, okay, how do we almost structurally at the core of this clinic identify the growth levers?
Correct.
And turn those and go to the next one and repeat. And if there's consistency across the two of them,
then great.
Big win.
Perfect.
Yeah, but it might very well be that actually the thing that, really moves the needle in clinic A may be fundamentally different from clinic B.
Correct. Exactly. And that's and that's a way to, sounds like it's more frictious, but I think there's going to be friction at some point. Either you take on the friction of discipline at the beginning or the friction of regret at the end. So it's just better front load that friction up front,
Yeah. Okay, interesting. So there's a thing. There's a thing that I think is worth digging into. So, and I'm recalling actually a talk from a private equity group that does a lot in the vet space, and they're now doing home services, they're doing accounting, they're doing a lot of traditional businesses in that sense. And the co-founder there described their business model. They said, a lot of people think we're in the acquisition and growth game, but we're not. We're actually in the integration game.
Correct.
100% integration. So you said it makes sense to you. So I heard that. I had to think about that because I don't come from a private equity background. So I had to think about that. You said it makes sense to me. So can you explain, eventually it made sense to me, but can you explain why that is important for clinic owners to understand? And I say that because a lot of the clinics that we work with are thinking about exit, but they don't recognize that when a buyer comes along and they try to price the performance, yes, they're pricing it on a financial basis, but there's oftentimes a window of how hard or easy is it going to be to take this alien clinic and make it part of the mothership? Is that going to be a low integration complexity, high integration complexity? So can you explain why this idea of how integratable you are is actually a very important thing from an acquirer perspective.
Of course, absolutely. I think here's how I see it. I think like when you're rolling up, when you're acquiring, in my opinion, I guess you could see it two ways, and I believe in the second one. The first one is to say, I'm just here to buy. I'm here to buy on a good price, sell at a higher price. Congrats, good stuff. The second view is I'm here to build a business. I'm here to build an organization, and acquiring other businesses, partnering essentially with other businesses is one of many channels I have to grow my organization. And by virtue of acquiring, I'm partnering effectively with, what I was saying earlier, right? Like the resources of that organization, and the paths have crossed. It turns out that this owner is setting their clinic because it's the right time for them to do so, or they're partly setting it, they're staying on, they're rolling their equity, there's a whole plethora of different kind of setups, right, as to how you partner. Sometimes, of course, it's a full exit and that's it. I think the point on integrability is because assuming that on the other side, the acquirer is thinking more option two, as in I'm building an org, like the sum of the parts has to be, the whole has to be greater than the sum of the parts, right? And so for that to happen, the onus, of course, is on the acquirer to do a good job of aligning things together. Now, this is a very high-level statement. At the core, integrating a business is about, in my opinion, like aligning the people, right? Like making sure that that's working well. And I think this takes us back to the bottom of view. I don't believe in the copy paste, like, okay, welcome to our firm, we're the big behemoth, so you just now do what we are. I think at the core, if businesses are driven by the everyday transactions and conversations that are being had, and if you're not setting the right standard for these to happen in alignment with what you want, what the organization should be going, I think it's setting yourself up for a long-term failure.
So interesting. So I think, so I'm going to follow the line of thinking for integration for a minute. So it sounds like there are some different components of integration, one of which is, at its face value, how easy is it to integrate the financial history of the organization?
Yeah.
Some clinics will, have updated accounts to the hour, and some clinics will have updated accounts to last year. And I imagine that some will even have updated accounts to 5 years ago. And there's a spectrum on something like financial integration that probably drives the integratability score. Then there's probably a cultural component of these people going to get with the whole. Are they going to contribute meaningfully? Are they going to be part of the thing that we're building? Or we build this together? One of the things that we see a lot of, because we're effectively in the CRM space, we don't call it that, but we are ultimately thinking about and trying to help clinics understand what does their customer relationship footprint look like, because most clinics have absolutely no idea. One of the things I'm interested in is when you think about clinic acquisition from an integration perspective, how do you think about, or does one think about, in some ways, the integration of the customer book? So you're buying a team, you're buying a history, a practice, a brand, you're also buying a patient book. And that patient book is potentially a thing of great value, potentially a thing of absolute disaster. Does it matter? Do you think about it? Does it make its way into the equation? Why? Why not?
Well, I think it matters, of course. I think at the core, the line of thinking that I have is, how do you make sure that by being part of a broader organization, you as a member of that clinic can be are enabled to do more, right? If you want to do more, of course. But assuming that you want to deliver more, make better use of your time, be more effective, see more patients, get better patient outcomes, all the usual KPIs that you might expect. And so I think that translates directly to the patients, right? Which is, well, this patient book is currently being served in X level, which is typically good. But how do we make sure that we take them to great? How do we raise our ambitions? Like, how do we make sure that they feel like they're cared for, that they're remembered, that they're building a stronger relationship with their clinic, if they feel like that's something they would have liked to have and they don't. I think if by acquiring a local clinic, you're able to enable them to do that, that's a win. Everyone wins in that
patient.
Yeah.
Owner, clinic.
Patient owner, clinic, whoever is the acquirer who was building their big org. I think that's the way to think about it. I think I wouldn't say one patient book is I think every patient book just matters, and you just want to make sure that they're getting the best outcomes.
it's interesting. I think sometimes we find that clinic owners communicate a tension between commercial outcomes and clinical outcomes. There's this sort of uneasiness about what should be the patient's responsibility, what should be the practice's responsibility. I'm thinking about a clinic we work with, who was speaking to just yesterday, who said, if a patient cancels, we don't want to follow up with them. We actually would rather they come back when they're ready. And we got off the call, and because we do a lot of their patient retention work, by complete coincidence, a patient of theirs wrote back in, probably within 5 minutes, saying, thanks so much for getting in touch. Actually, I canceled my appointment a few months ago because I was not feeling well and I forgot to rebook. And thank you so much for getting back in touch. And thank you so much for, helping me, etc. And we then copy and pasted the message to the clinic because it's very full circle. But I think what you're describing is almost the triangle of value. Value for the patient experience, value for the clinic. In some case, the clinic is the owner, but also maybe separately value for the group. And I think that is not something that, at least from a lot of the clinics that we speak to, they don't necessarily align around that thinking. Maybe in the UK, it's because there's a NHS, commercial, private, etc. There's some cultural backdrop to that. But certainly I think that the patient experience is largely informed by all the things that you just described, the relationship with the provider, the sense of being cared for, that access, the ease of engaging with the practice, but oftentimes that becomes second priority. And the question is, why is that? Going back to something that you said earlier, you said integration, that makes sense to me. You talked about why integration makes sense to you. I'd love to understand, let's say you're sitting down with a clinic owner. This is your first conversation with them. So you're introducing them to you and your fund. You want to learn more about them. What's the soup du jour? What is the topic of that conversation? First conversation, so it's maybe more learning driven, but what are the things that you're trying to listen for, the soft signals that make you say, okay, we should go and dig in deeper here, or actually not for us? What's that first date sound like?
So you're saying when we meet clinic owners?
Or more a traditional business owner, but sure, in the context of health.
Yeah.
Yes. What's that first hygiene screen?
We back, so on my team, we back a lot of people who are at the acquisition side, on the acquisition side. Many times we also join in when these acquirers meet the sellers, the owners. But I just want to clarify, the majority of my time is spent with the acquirers, and many of the people we work with, the searchers and the acquirers and so on, they of course spend a lot of time with these owners. But we do also come in when we're trying to build extra trust with many times the owners want to make sure that the acquirers they're speaking with have capital backing and things like that. And so we also like to come there and show support. I think, frankly, a lot I just want to clarify that just so it's not I have 600 conversations in my time. I have maybe 10 that I've done with 12.
So you're backing the buyers.
Correct. Yeah. Just so you know how many ends I'm basing my answer on. The number one thing I think is to understand who is. I guess it's two things: who is their customer, what matters to their customer, and how does the machine work. How is the sausage made? And it's almost starting from first principles every time. You asking questions that sound very simple. You go to a vet clinic and you ask, well, who's your customer? Well, we know. But sometimes when you ask these simple questions, you get really helpful answers. Oh, but actually we serve this type of customer because of our price range or because of where we are located, where next to parking. New information surfaces when you ask simple questions, in my opinion. And so that's kind of the soup du jour. This is the first conversation, is simple questions that open a lot of answers that then help us understand many things. Is their vision for the future aligned with ours? Are they, how open are they to working with us? Do they think that we could be a good partner to them? Is there an opportunity for us to build more trust anywhere where there's a misunderstanding? So many things, but typically it's really start from first principles. Don't make upfront assumptions. Keep things simple.
You asked the question, who are your customers? And I find myself sort of going through my head of all the clinics that we work with and saying, if I asked them that question, I say, who are your customers? I can sort of imagine the answers I would get. And I think for the really high performing clinics, they would have a very, very sharp answer, not a prescripted written down answer, but they would be able to visualize with extreme precision. We are for patients who look like this,
Yes.
who behave like that. And then I can think of other practices where they may have that familiarity with a subset of their favorite patients, but they probably wouldn't be able to carry that logic across the book. And it's an interesting question. And I wonder if even we should start asking that question when we engage with new clinics to say, tell us about your patients. Yeah. Where do they come from? Who are they? Are they coming to you because they dropped their kids off at school next door? Or are they commuting across town because you are near where they work? And I think it makes sense to have that sort of, what's your thumb on the pulse for this sort of customer side of the business. Interesting. You said earlier in a few different instances how AI is
Creeping its way into
Yeah. Exactly. And even before we started chatting on camera, you were talking about the fact that you get approached all the time. Will AI-ify you on this, and will AI-ify you on that, and like, will make it all more efficient? I think there are increasingly two schools of thought around this, and the answer is probably somewhere in the middle. The first one is AI will transform everything, and it will be the best, and it will be the efficiency is inevitable. And now increasingly there's this other school of thought, as you'd expect, big voices coming out saying, where's the ROI? Someone please, in some cases it's obvious, but in many cases, show me the measurable thing that's changed. And again, it happens in some cases, and in many cases it doesn't seem to happen. It's very hard to have that accountability baked into something that's so unknown. Cost of tokens going up, cost of underlying capability. How do you think about, at a portfolio level, at an operator level, how do you think about the ROI, the business case for, is this an AI problem or is it not an AI problem?
I think a few things. First, makes sense that there's two voices. We learn about these like hype cycle curve. I don't know who came up with that curve, but I think it's fairly accurate, right? At some point you think it's going to take over the world, or you're like, actually nothing happened. So it's not going to take over the world, and it lands somewhere in the middle. So I think we're probably somewhere in the early stages of that, like probably between the peak and the trough. I think at the risk of sounding like a broken record on this in this chat, I think it's dangerous to make broad-based assumptions on AI for anything. I think the most helpful way to think about it is, what is the job to be done, and how did I do it before, and if I had to redo it today, what would be different, and would that work with AI, right? Maybe in the past with the software era, what SaaS would do is to say, okay, well, right now you do X, Y, Z, and you store your data here. Now you can do X, and then we'll do, Y and Z for you, and then it's simple, but the workflow basically stays the same, just go faster, right? It's like, I think that's a lot of what the software solutions where I think AI, there is probably two levels to it, right? There is either soft, like this style, like what the workflow was already doing, or just do it faster, or in some cases there's opportunities to cut the workflow completely and reinvent it. I think that is more into this is something that's more emerging. I think that, however, what's very interesting is in many traditional businesses, and especially in clinics, because maybe small scale businesses and so on with repeat work. I think there's lots of workflows, especially with customers and so on, that where you can use AI to do simple things that where the ratio of the difficulty to implement to the value you can generate is very attractive. Again, I think it's hard to come in and say it applies broad-based everywhere. I think you always need to start with customer, business, who's doing the job, what matters to them, why, what do they need to do to be more successful, what do they want to do, and then go from there. But I do think that there's enough there to trigger curiosity to go and explore opportunities to implement AI in those phases. Is that making sense?
It makes a lot of sense. We often hear from practices, and sometimes we even end up in sort of tenders, if you will, with practices that are looking at AI receptionists. This is the flavor of the
yes.
AI receptionist. AI receptionist for this, AI receptionist for that. This can be an AI receptionist, that can be an AI receptionist. Everything's an AI receptionist. And I think what you've said makes perfect sense, which is that the devil is in the detail. And what I often say to clinic owners who are thinking about implementing AI receptionists, said, great, could be very helpful. Please just be sure you know exactly what it's going to do. Exactly. They say, well, it's going to answer the phone. I say, okay, good, then what? Oh, well, good answer, then what? Then it's going to go and make an appointment, and then what? Then and oftentimes what we find is that the then what doesn't get answered.
Yeah.
And we do a lot of appointment booking.
That's the top down. Yeah, exactly.
That's it.
Oh, phone can be automated. Yeah. You phone. Good. Problem solved. That was a 10-second reasoning. That's not a recipe for success. You know?
Exactly. I think it's so hard. I mean, I say to a lot of people that we speak to, I would absolutely hate to be running clinic right now. Hate. Because it is so hard to make a decision about what technology to adopt, not adopt. Everything does everything.
Yeah.
Everything can, all singing, all dancing, we do this, we do that, we do this, it's impossible. And we're in the space. We're building this every day.
Yeah.
We're working with the robots. We're working with the agents, but we have a very strong human component to what we do. And I have to tell you, it's not easy. It's not straightforward, because in healthcare, if something goes wrong, it really goes wrong. And there's a massive verification tax, absolutely massive. And this is the example I love to give. When a patient calls in and asks to be booked in with Dr. So-and-so only likes to work with 15-minute gaps between her appointments, and Dr. So-and-so needs the appointment to be booked in the color pink in the practice management software, and likes 3 other things like custom notes in there. Is the AI agent going to do that? Is the AI receptionist going to do that 100% of the time? Because the 2 times out of 10 that it doesn't, the team is going to spend as much time fixing it and figuring it out as they would have spent to do the 10 in the first place. And so I think this point that you make is absolutely right, which is, it's not that easy. It's not, we need someone to answer the phone. AI can answer the phone. Problem solved.
Yeah, you see examples of current companies that implemented AI for their customer service only to walk it back. So this is not an anti-AI point either. I think things are coming, but I think it's in a way expected. If something new comes in, everyone rushes to try it out, and I think it makes sense. And I think actually there's a lot of opportunity to take things a bit slower, but focus on the areas where it actually does matter with operators and understand exactly what you're saying, exactly what you're laying out, the details of what matters to doctors. And only that, ironically, I feel AI has the computing power to understand these different details and could technically do them better. But I think that it takes time. I think it takes refining. And I think it takes also having a partner who is the right interface between ops, technology, and patient care or commercial to drive these sorts of things.
Yeah, that's a hard,
Yeah.
I think that balancing act is quite hard.
Correct.
There are a few really interesting businesses in the US in particular that were initially not AI native businesses. They were more in the sort of business process outsourcing category, doing remote front office work. And it's been amazing to see how effectively they have transformed, because the foundations were so strong, so process, so detail oriented, so methodical about the work that they were doing, that AI made it faster, made it better, made it easier. But had they not established that foundation of work in a pre-AI era, arguably that transition would not have been nearly as smooth. And now we see people coming in as new entrants, and they just slap the wrapper on the tin and they say, here's the all singing, all dancing, all everything. And what I will often say to a practice owner that we might be speaking to is, great, they're going to do your new inquiries. Fantastic. That's a really important thing. Acquisition, conversion of new interest, very, very important. Let's say it gets 3 of those wrong in a given month, and your average value per patient is, say, 6 appointments, and they pay you a total of £1,000. Those 3 just cost you £3,000. 3 missed lead handles, £3,000. So you might be saving a full head count or half a head count, but 3 wrong handles, you just lost £3,000. You have to do that trade-off, that P&L trade-off, which I think is very hard to do.
Yeah, I agree with you.
Interesting. So you're now, transitioning, you're sort of moving between or from a VC
Yes.
pond
Yes.
into still on the investing side, but into a more PE pond. What's new for you? What's the same? What's new? What's changed in the experience, the perspective?
What's the same is what I love doing, which is partnering with small businesses, focus on growth, and focus on, work with founders. A lot of my job is basically half. Like a whole half of it is spending time with entrepreneurs, whether on the acquire side or sometimes also on the seller side. And the other half is, like just the typical investing job, right? Like in analyzing, assessing, coming up with investment recommendations, TCs, and or whatnot. What's different is that, well, first of all, now we are thinking about majority ownership of businesses. We're in a bilateral relationship, so we feel like we take full ownership. What I mean by ownership is not only on the cap table, it's ownership in terms of accountability for ops to work well and to support. So support the acquirers that we back, right? The searchers who do build these roll-up platforms, who essentially this thing is called entrepreneurship through acquisition, right? They become entrepreneurs through acquiring the underlying businesses. We want to be the best partners possible in every way. Do not only the big things well, but also the small things well, right? Go the extra mile on everything, everywhere we can.
What's an example of a small thing?
Small thing is, someone wants a sample slide because they're presenting something to a seller and they want the best wording for that. Very small in the grand scheme of things, very small. Or they want a list of lenders in a particular industry, or it's not, I mean, everything is, I guess, leave it up to judgment what's big and small, but I think big might be, we infuse a ton of new money into a platform. This is more smaller, kind of tactical, but I think we really want to get all of these different things right, like make the right introductions as well, and just build the right ecosystem for success for everyone. I think VCs obviously do that as well, but when you're VC, you share that role with other VCs around, right? So versus when you're, in our role, you're typically with the only main investor. I think that's one thing. I think the other thing also is that these businesses are, well, I guess they're not startups, right? So cash is a consideration from day one. And so I think there's always a little bit of a ceiling. Sometimes then you want to come in and me the first, right? So many ideas that say, oh, you guys could do this, could do that. Like here, there's a world of possibility, but then of course there's hard P&L limitations, right? That maybe you don't have if you're a pure play startup. So I think that's another, obviously, another point. Yeah, I think that's kind of the main thing. I mean, I think a lot of it is, at the end, is the same. You're trying to build, at least from my perspective, the philosophy is the same. You're trying to build a lasting business with the right foundations, built on people whose incentives and whose vision for the world and for themselves are aligned with what you're trying to build. It's a collection of people, right? So that doesn't change whether you're built, whichever kind of investor you are. At the end, it's all founders. They're all taking risks. They could have done something else. Investor. Thank you. They could have done something else. And these are founders acquiring and partnering with other founders. So it's founder squared. So it's a lot of that. It's a lot of ops, a lot of people. It's a lot of understanding how the little things are done. Sorry, one more thing you were asking me in terms of the little things. Actually, there was something that feels like it's little, but it's pretty big. When you're making acquisition, you have to think about who takes over the utility bill. Lights can go off in your clinic, in your shop, because that's a very small thing, but we have to help address that because small thing on paper, big thing in practice.
Funny, when you buy a business, you don't think of utility bill. Not the first thing you think about. You're right.
Yeah, it's part of an acquisition. It's also who takes over the utility bill. Sometimes it's a quick thing, like when you move into a new house. Sometimes, I don't know, there's some wishy-washy. Yeah, exactly. It's a random anecdote, but yeah.
No, it's a very real one.
Yeah.
I think in the time we have left, so I would love to fire at you quick fire questions.
Let's go.
1-word answer is fine. 2-word answer is fine. Okay. So you're selling your clinic tomorrow. What's the number one thing you should focus on?
No, I guess the cheeky answer is the price you set at.
I'm not. Just to give me the same answer on this. If you're buying a clinic tomorrow, what's the number?
The price you buy. No, I'm kidding. I mean, this is a financial. If you're the number one thing you should everything has a quantitative and a qualitative. I think, again, depending on what the setup is around selling your business, the real question actually is who you're selling to. It's always, from my perspective, many of my answers boil down to the same 3 principles: people, bottoms up thinking, and so on. And so, if I'm going to sell my clinic, my lifelong work, my baby, or my main asset, it would matter to me a ton who is on the other side. What's happening to it? It's a bit like when you sell your childhood home, who's going to sleep in your room? Is that, you want to make sure somehow the legacy is kind of, especially if you're going to be part of it. If you're just selling and detaching yourself from it, even in that scenario, I feel it's important. But especially if you're going to be partnering with these people, do you trust them? Or do they understand your business? Do they respect you? Like, so many questions. And if you buy, frankly, I'd say it's the same thing, but the reverse. Are they people you can partner with? And yeah.
I love it. So in a world of AI replacing jobs, it's still all about the people.
It's always going to be about the people. As long as we're a human species, the whole thing is about people.
Cyrus, thank you so much for coming in, sharing your experience. For those interested in learning more about Cyrus's work, there may be some people who are listening interested in doing that. You can find him on LinkedIn.
Yep.
Very active on LinkedIn.
Yes.
And also he'll be with us on the 18th of June.
That's right.
Which we're very excited about. So if you want to meet Cyrus, come see him on the 18th of June. Obviously, if you want to keep hearing great conversations with people in healthcare, like, subscribe, and we'll see you soon.